Time you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
All right, let's see if it works this time. I see it's frozen, connection issues. See if this works for us this time. Now okay, it seems. Okay. All right. My apologies. Welcome to the market forecast for Monday, September the 20th. Had a couple of issues here, it looks like, and maybe we've got those taken care of. However, there are the charts. I'm having a little bit of difficulties this morning with the technology, as usual. It attacks me. I'm John Hoagland. Thanks for trusting me with your time. As always, we're going to try and look for good context, risk management, and patience. Markets already on the move. U.S. equities feeling some of the pressure from global markets. We've got a lot of information coming out this week as far as economic numbers are concerned. Today, really at 9 o'clock, just the housing market index due out at, again, 9 o'clock Central this morning. But tomorrow we have housing starts and permits. The FOMC meeting begins tomorrow. We have existing home sales, crude numbers, and the FOMC announcement at 1 p.m. Central on Wednesday. The Fed Chair press conference at 1:30 p.m. on Wednesday. Lots of eyeballs will be looking at that. As far as other things, on Thursday we have jobless claims, PMI composite flash, misleading indicators, and nat gas numbers due out on Thursday. And then Friday, lots of talking Feds and new home sales. We're going to hear from the Fed Chairman Powell at 9 a.m. Central on Friday, as well as 1:30 p.m. on Wednesday, as far as the Fed information is coming. Yes. Well, you know, there's lots of pressure in China with this the company that's 300 billion in debt and can't make their payments. So there's a lot of things going on. We'll just get started here. U.S. equities sharply lower as global markets tumble on Evergrande fears. That's the company that's about to default on 300 billion in loans. Chinese company, real estate company. Also concerns about Fed meeting and potential of the Fed Reserve beginning to wind down bond buyback program. The S&Ps completed their head and shoulders pattern after the island top that we've been talking about for a couple of weeks. That's a pretty powerful reversal signal, the island top, and now the head and shoulders, which is now complete and continuing to the downside. Crude prices have fallen on economic fears, as well as Gulf production coming back online after Ida and another tropical storm. So there's a lot going on, as always. Make sure you like, share, comment, question, feedback, and heckle at will. We're always looking for good feedback, of course. Today, for the Futures 301, we're going to be discussing the auction process. What else could we do but talk about the auction process when, after all, what are these markets? Auction processes. There's the link for today's Futures 301 on the auction process, and then there's another link here for group coaching on Wednesday. The link for the futures classes are the same. It's the same no matter what. Just like to pop it in there in case you haven't registered. And I'll look forward to seeing you there. That's at 12:30 Central today. All right, I'm gonna say good morning to everybody, and I do apologize for my technical difficulties this morning. I'm going to have to be chasing the charts around a little bit too, it seems like. I just restarted everything, just did everything I'm supposed to do, and it's still giving me fits this morning. So I'm going to say good morning. Brian, first in the room. You win the prize. Theo, good to see you. Eddie, Steve Lee, Janus, Jim, Clarence, Bill, Frederico, George, good morning. Yeah, it's going to be a fire sale day today, it seems, right? Drew, good morning. Jimmy, Ricardo, Vince, Greg H., Zorain, Trading Research, good morning. Jerry is awake. Hope John is too. His computers don't seem to be. Rob T., Frederico, sorry about the issues. Ricardo, UG, James, Andrew, Justin C., good morning to all, especially copper and natural gas. Angelina, Luis, good morning. Ange, Chris, Robert S., NM. Video title, isn't feeling the pressure of FOMC. Market's giving pressure to FOMC to print. Yeah, of course it is. Yeah, and they're, you think they're going to stop? I don't know. Vince, good morning. Dead letter opener, good morning. Michael, Jason, Don K, Tone, Andres, Ocean Blue, good morning. Cam, Nelson Benitez, Deanna Floyd, good to see everybody this morning. If you're new to the market forecast, welcome. We're going to jump into the charts here as soon as I can get them stable for us. I do apologize for this again. This is a pain in the rear. I get it. And I apologize again. Let's see what we've got. All right, so starting with the daily in crude, let's jump in. All right. So we had a pattern, a inverse head and shoulders pattern, which is typically, as Fred kind of has been pointing out, it's typically a reversal signal, but price has been kind of moving higher. It moved back down. That's why I was kind of looking at this as a potential head and shoulders pattern. Our target for this would be from the low, in this case, of the head to the neckline. Once the neckline is broken out, it had us up around $70, $71. We knew we were going to have trouble up around these three swing highs here, and we certainly have had some trouble there. We lost about 9,000 contracts in open interest on Friday, but that's still a function of rollover, perhaps. But we've had a kind of a change in the fundamental landscape of crude oil for us. Volume and open interest still are a little bit rollover, blurry, but the head and shoulders, if it is still true, I'm going to be looking to the neckline for possible opportunities today. And we saw one here before the open. The market turned all the way right down to the line that we're calling the neckline, and then found some buyers down there. So this is going to be an interesting trading day. Take a look at the 30-minute chart. So here's settlement is all the way up here, 71.82. We've got a lot of overnight shorts in this market, basically taking price to the neckline of that head and shoulders and finding support. The market is now open. I don't think that we're seeing the opening range at either extreme, the high or the low of the session. If we start to see our overnight shorts starting to get nervous, they can push this market up to close the gap or even points higher. If we're looking for opportunities to sell strength, which 1, 2, 3, we've started to one time frame lower, we're going to be looking forward to our overnight inventory, helping us give us a better trade location in an opportunity to sell strength today, if that is your hypothesis. There may be a decent trade in the unraveling or the reconciling of all of these overnight shorts back towards Friday's range. Typically, we're going to see where did it start? Basically, settlement. If we're going to even out the inventory, it's going to come up to approximately settlement. If we haven't already, in this little bit of consolidation, taken care of some of those overnight shorts. E-mini S&Ps. This is going to be a challenging week for our equities. We have the head and shoulders. that leaves an island top right at the high, of the contract high, all-time high, is an island top. That's usually not a good sign, and obviously that has proven to be true. We've got our 50-session exponential moving average, which when we start to look back has been very supportive for the better part of, if not all of, this year. This is the deepest move we've seen down below that level, and it makes sense because, well, we had a reversal pattern here. The head and shoulders is a reversal pattern. We're still wrestling with weekly kickoff low very early in the week this week with 43.53 even. We've taken a pretty good look down below it. I'm more interested in seeing what happens in the regular trading hours, and there go the charts. This is very upsetting, and I do apologize. We're going to have them up here post haste. And there they are. So we're out of rollover. We can start to lean on volume and open interest again a little bit now. This weekly kickoff zone is going to be somewhat pivotal today. Uncertainties, global uncertainties, market uncertainties continue to mount. If it keeps piling on, we may see this market continue this move to the downside. We can't forget the resilience of our U.S. equities markets. We've come off a pretty decent high here. I'm going to probably be looking. This is not a 5% move now. It's a little bit higher. I'm going to straighten those out so we can see how the where those levels are tomorrow morning. All right. Yes, lights back on. So, again, this weekly kickoff level is going to be somewhat important for us. It is. Let's take a look at the 30-minute chart. It's only Monday, I got to kind of remind everybody. It looks like there's big opportunity today, and there's likely to be. But if we get too excited, if we lose our patience, if we start to get too involved too early, we may miss better opportunities as the day goes on. Look at how short this market is right at weekly kickoff level. Okay, this is a previous naked point of control. We've got another one here. I usually leave those on until after they're touched in regular trading hours. So we've already been seeking out visual numbers, which is usually what the market's going to do. When the market's looking at when traders are looking for a particular level, they tend to make price move to those levels. So we're going to have a gap here. We're already perhaps seeing some of our overnight inventory getting a little bit nervous. And I'm going to be still continuing to use the weekly kickoff low as an important inflection level for a possible execution. Remember, it's a zone. There's nothing finite in futures trading. So with the gap, deep overnight shorts, there are still many downside visuals here that we may go down and continue to try and reach. But remember, we've got all these overnight shorts here, and if we don't see new business, longer time frame sellers come into this market to start pushing it lower, we may see a decent move in the opposite direction, which could, again, much like crude oil, give us the opportunity, perhaps, to look for a strength with which to lean on, with which to look for a better trade location to the downside. NASDAQ. All right. The weekly kickoff low is, again, pivotal. We are well below the weekly kickoff low now. Look at what we've got here. We've got a move up. We've got a shoulder. We've got a head. We've got a shoulder. I would say that this is a completion of the head and shoulders reversal pattern, but it's still a reversal pattern. Volume and open interest. We added 4,000 on the downside on Friday on a lot more volume. Again, that's partially because it was expiration. And we've got the 50-session exponential moving average in play today, much more so than it is in the S&Ps. S&Ps are considerably lower than that. And the NASDAQ has been holding up stronger. So taking a look at the 30-minute chart. Okay, we've got visuals down below. Settlement is all the way up here at 15,326. There goes the charts. Everything was running so smoothly, and then this. All right, so here's the 30. Settlement all the way up here. Charts are back on. Settlement all the way up here. Weekly kickoff low, a stutter step on the way down. Is it going to be resistant on the way back up? We've got a lot of overnight shorts here. If we're going to be looking for opportunities to sell strength, this may provide a strength for us to sell. Again, we're going to be waiting for FOMC. So at some point, I'm expecting these equities markets to find an area of balance where two-sided trade can occur and allow some of the bigger traders to hedge or liquidate some of their positions for what might happen on Wednesday. Not right now. It's only Monday. We're at the beginning of the week, and a lot of kind of juggling to probably do for our longer traders to protect themselves for what, again, might happen on Wednesday. Overnight shorts, gap rules. It's all about acceptance below the weekly kickoff low. If we can't get back above weekly kickoff low, that should embolden sellers to go and look for some of the visuals that we have down below. Gold. Volume and open interest slowed on Wednesday. Of course, it was an inside day. It's a rest day after the big push to the downside on Thursday. We lost 1,000 in open interest, not that big. Fear may now be becoming an issue. I don't think I mentioned the VIX this morning and the dollar. The VIX is up 28% at 26.21. A lot of fear coming back into the marketplace, noted by VIX. Again, 28% higher at 26.71. The dollar index was slightly higher at 93.42, and the yield on the 10-year was a little bit lower at 1.32%. Sorry if I did omit those, but that VIX number is telling us, yeah, there's some fear in this market. And that fear in this market could boost gold pricing. Right now, we're in balance. I don't know how long that's going to last. Take a look at the 30-minute chart. Okay. No gap. We do have some overnight longs. Settlement was all the way down here at 1751.40. So we do have some overnight longs here. Are we going to accept above value? We're going to get a move back down to value and see if we can re-accept value. We did open outside of it, not necessarily outside of range, but I'm looking for value area rejection or acceptance. This level down here, just before the open we got down there, just kind of rotating here. This 1757 gray line here is a previous weekly kickoff level that may at some point become important for us. The euro, heading lower with the dollar moving higher, volume and open interest. Lean towards a healthy downside auction. We had some pretty decent volume on these down days. Yeah, and Friday we added 7,400 in open interest. Now, again, that may be somewhat rollover related, but we're going to be putting that past us very soon. The dollar remains surprisingly strong. Weekly kickoff low, last week's low, looks like they're going to be in play for us so far early this week. Here's our they keep moving on me. Oh, and there go the charts. Oh my goodness, this is awful. All right, we're going to get through this. And there they are. Okay. So last week's low is here. Weekly kickoff low is down here. They're both in reach. We have a naked point of control that's yet to be touched. We have settlement up here at 117.49. We've got some overnight shorts, but with some consolidation. I'm looking at those largely reconciled. So I'm really going to try and stay patient and see if we can get an opportunity to see if we can reject yesterday or Friday's range, or if we can reject the weekly kickoff low. I'm looking at this as an area, as a market that's out of balance, yet somehow in balance, if that seems to make sense. And for the 10-year, okay, we had a pretty deep move down below that previous weekly kickoff low of 132.25. It did not close. I left it there. We've seen a move back to the upside and a little bit of a downside move in rates. So we're really just still kind of bouncing down the cart path here. The ball just continues to move, and in my golf game will probably land out of play. Take the 30-minute. Oh, there it is. So we've got settlement here at 132.25, our weekly kickoff low. We've got a lot of overnight longs in this market already looking like they're going to unravel some of those longs. When they unravel some of those longs, depending on how deep it gets, that can be a pretty decent opportunity to look for a long. Now, we've started to add the nat gas. I've got some considerable amount of research before I start coming up with important inflection levels and things like that. So here's that October nat gas. We've seen the big move to the upside. Norway, I guess, is coming to help Euro's gas shortages out. Saw that in the news this morning. So Norway going to be sending some nat gas to Europe. So what are we looking at here? Well, we had a weekend gap here. We have a naked point of control back here. We have another one here. No real overnight inventory. No real rush to get into anything here this morning. Just in short time frame. Mind you, this is a new product for the market forecast, and I'm going to be taking some time and getting to know a little bit more about how the market moves, just through the market profile and through technical analysis. Okay, Justin, you should be happy about that. And I saw a question from Fred. There's a small island gap, the 914 high. Hey, look at that. We do. We have an island top. We have a 3-day island top. There's no regular trading hour connection. Still just a few ticks between those two. Does that mean that sellers could be committed? Take a look at the daily here. It is an island top. Sellers could be committed. I think what's going on here is more of a function of rollover and fundamental information. It doesn't mean that technical island top that we put in for those couple of days there isn't important. So here's the high, gap, no gap fill, now opening below it. That leaves that island top. So Fred, if that island top remains, if we don't get to the low from Friday, which was 71.03, then that island top is going to remain and may be impactful for us moving forward. Okay. Anthony, Shady Trader. I didn't know you were Shady Trader. Now I do. All right. Gone a little bit long here. I apologize about the charts. I got to find the gremlin again. I will do my best to have them stable again for tomorrow. Let's take our deep breath. Trade well today. Stay patient with all this movement. It's easy to get kind of roped into some secondary opportunities. If you're looking for trades today, you're going to find them. Make sure they're the good ones. Be patient. Let the market come to you. Trade well today. I will see you for the futures trading 301. Dan should be with you for the recap today. I look forward to seeing you tomorrow on the forecast, and again today at 12:30 for futures 301, the auction process. Trade well, get out there and profit. I will see you in the pit in about 1 minute. Trade well.